Howdy, hot shots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. I told you a couple days ago that I am a little bit in the red in ULTY still, just basically one good day away from being in the green. But I wanted to see how true that was for different periods of time that you could have been invested. So I took a look at what $10,000 invested each month this year would have returned you in ULTY. And I've got the deets here in my little flowery notebook. Did a little bit of figuring, and I'm going to go over those with you here in a minute. It's surprising to me, actually. I am surprised because I am in the red. And obviously I didn't go through every single day this year and figure it out. It'd just be too much data to try to share with you in a video. So obviously there were going to be some days in each month where you could have gotten a higher price when you bought in, missed a distribution on the front end, and maybe didn't get to the same results that I found here. But the results actually are shocking to me. I did not expect for the results to be what they are. I still have people in the comments that are asking why people would say that the NAV would go down on ULTY and not recover. And I don't think they understand what we're saying. Like, some people are saying that they're paying you out of the funds they're paying you out of the stocks, like they're paying you back your capital. And they may very well be doing that. I tried to look at their prospectus. Their prospectus was missing from the website. Maybe you guys can see it. I loaded it up and I couldn't get it to load. I tried 3 different browsers. I did look at the condensed prospectus on there. It didn't say how they were going to get the money to pay out the distributions. But on the general disclaimers on their website, it does say that they could pay you out of your capital. And so that could result in significant losses. So we can't write off the possibility that they are paying out more than they're earning in premiums. I would expect them to only pay out what they earn in premiums. That doesn't mean that I don't think that your capital could go down anyway, though. That's what I would expect if it were just me dictating the rules. Obviously, it's not. You know, you have to decide what's a good investment for you and what you expect out of the investment. I was hoping to dig into the prospectus and see somewhere where they said they were only going to pay distributions out of premiums earned, because that's what I would like to see. Even if that were the case, even if they were earning enough premiums each week to make the distributions, that doesn't mean that you're not going to lose capital that is basically unrecoverable, okay? That's inherent to the covered call strategy. Their stated goal is to maximize weekly income. All right. If they're doing that, they're going to be selling at the money or very near to the money covered calls. That's going to limit the upside. Now, they may go into some spreads where they buy another call that's at a higher price in case stock just rockets up. They don't miss out on all the gains. But for the most part, they're going to be missing out on the bulk of any gains on a stock. If they're maximizing income, they cannot use all of there's already a put skew on a lot of these stocks, which means that if you were to buy a put that were the same percentage or dollar amount out of the money as the call that you were selling, you would actually be spending more. So when they go to buy a put, they're going to be buying a put further out of the money. So if they are selling a covered call 5% out of the money, they may be buying a put that's 20% out of the money for protection. Now, it's good to have that put there anyway, but the reality is that caps your upside to 5% and it only limits your downside to 20%. Okay, and obviously with the time premiums and everything, those numbers are not going to be exact, but this is an example. So if you have a 5% upside but a 20% downside, and you're right half the time, then half the time you're going to lose somewhere between 0 and 20%, and half the time you're going to make between 0 and 5%. Okay, that's aside from the premiums. So you still have more downside potential than you have upside. If they continue to do that long term, then your losers are going to drag down your principal value and your NAV, and you're not going to be able to recover it. You would have to be in a very strong bull market, and they would have to be perfect at picking stocks for the NAV to continuously go up. What we are hoping is that the distributions are larger than the losses that you're taking, so that your total return is still in positive territory. I do not believe that you're going to go a long period of time in ULTY where your total return is going to be as large as the distribution rate. Right now they have like an 86% distribution rate. I don't think you're ever going to realize that amount of total return. It could happen for a month or two. Okay, fine. It's not going to happen long term because of the design of their strategy, because they want to maximize income, and because they have more downside than upside. Okay, so that's my own personal opinion. And if you're going to make the bet, you got to do the vet. So you could have a different opinion and you can share it down below and you could sway people one way or the other. I honestly don't really care to sway people one way or the other. Whether somebody invests in ULTY or gets out of ULTY or whatever, I want them to make the decision that's the best for them, because it's not going to impact my investment at all. Like when somebody sells out of ULTY, that's not going to impact my investment. If somebody buys into ULTY, it's not going to make me any money in any way. So I honestly don't care at all. I would prefer that you do what you think is best for you. If you can't stomach the volatility of ULTY, I completely understand. There's a lot of other funds out there that have more stable income and potentially even more room for upside. If you like ULTY and you want those big distributions, that's great too. You have a way that you can spend them, or you just want to ride the ULTY train out and see what the total return is. Good on you. So I'm not trying to sway anybody one way or the other. I am still holding my ULTY. And as long as the total returns continue to match what the total returns have been in the past, I probably won't sell it. Even though I'm a little bit in the red right now, long term, it looks like it's been pretty good. So let's go over these numbers. I just started with a hypothetical $10,000 investment in ULTY, and I wanted to see each month what your returns would have been so far. I'm reinvesting my dividends, buying more shares of ULTY to increase my income. So I just did a total return, including DRIP. So it's not always the first of the month because that's not always a market day, but I started in January. So January 2nd, if you had invested $10,000 in ULTY, at this point right now, having reinvested all your distributions, you would have $11,328, which would have been a 13.28% return. Now, bear in mind, these are total percents returns since the investment. That it isn't annualized. So annualized, that would be even greater. In February, if you'd have bought $10,000 worth of ULTY, you would have $11,145 for an 11.45% return. Now, in March, you would have been timing it perfectly. If you put $10,000 in ULTY at that point, you would have had $12,201 or a 22.01%. And that's getting up higher. For a few months there, you would have timed it perfectly. In April, if you put $10,000 in, you would have $13,097 right now for a 30.97% return. That is a significant return in that amount of time. You're talking about, in 5 months, close to 5 months, you would have made 31%. That would have been beautiful. If you bought in May, you wouldn't have made much less. You'd have $12,927 for a 29.27% return in roughly 4 months. June, it starts going back down to where your returns are a lot lower. Now, we know I got involved in July, but then bought all the way into August, bought several different days. So I don't have an exact amount for each day that I bought because there was a bunch of different days. So we're just looking at the beginning of each month. In July, if you'd bought $10,000 worth, you would have $10,604 for a 6.04% return. And that's 3% a month. That is not bad if you'd have bought right at the beginning of July. At the beginning of August, you would have $10,091 for a 0.91% return. So August has not been great, but that still annualizes to over 10%, which is not horrible either. So if you just took $10,000 and put in a lump sum at the beginning of any 1 month this year, even before the share price dropped significantly, even before they went through somewhat of a little restructuring, okay? Or even if you did it recent at the higher cost of the shares, you would have been profitable. And so that was really surprising to me. I really thought once we got into July and August that the total return would be in the negative territory. And like I said, my total return has been negative, but looking at these numbers really gives me confidence that if I hold on to it, there's a good possibility that within a few months, I'm going to be in positive territory. And long term, it's going to be a pretty significant gain. Now, do I know that to be sure? No, I don't know that for a fact, but at least I see possibility because the share price has done nothing but go down from the beginning of the year, essentially. There was a couple months there where it stabilized, went up a little bit, but it's back down. So it's not at its lows necessarily, but it isn't strong at this point. But even with that NAV decline and the share price decline over the course of the year, you're still in positive territory. So that's pretty dadgum good in my opinion, especially considering that in April we had the tariff situations and then last month they were talking about tariffs. So it's been a pretty rocky year and maybe it hasn't made as much as other investments, but it still is a positive return. So that's pretty strong, guys. And just so you know, I went to my uncle's funeral and my cousin, he was kind of broken up. He said, I really can't speak here. He said, would you say a word? I said, oh yeah, sure. I said, so I went up to the front and I said, plethora. And my cousin, when I went back to sit down, he said, thank you. That means a lot.